A 34-year-old is looking for $500,000 of life insurance to match a mortgage which may last 30 years. Let's look at different ways to provide that protection. We've got the date of birth, male, non-smoker, regular health class. There are better health classes for people who are in even better condition. To be conservative, we'll use the regular class. We'll start with term 10, where the premiums are level for a 10-year period and then increase. $500,000, Ontario. We see the cheapest product is from RBC Life, $246 a year, or about $22 a month. For our comparisons, we'll just look at monthly premiums because those are easier for budgeting. It is actually cheaper to pay annually. You can see how prices vary from $22 up to $31 for Sun Life. Manulife is here too, but this is a different category, Health Style 4, instead of Health Style 3, which would be about $28 a month. Now we will look at term 20. Here the premiums will be level for a 20-year period. Again, we see that RBC is the cheapest product at about $35 a month. Again, there's quite a range, with Sun Life once again being the most expensive. Since the mortgage is 30 years, let's look at 30-year term. Here we see the cheapest product is Assumption Mutual Life at $60 a month. The most expensive is BMO at about $73 a month. Notice that there are fewer companies that offer 30-year term. If we wanted permanent insurance, let's look at term 100. Here the premium is about $242 a month. You can see that insurance premiums vary quite a bit depending on what you are getting. Let's continue our analysis and run RBC. Oh, here's RBC. They say we've got the out-of-date software. Let's update. Out of curiosity, let's see what RBC is currently charging in the old product. We've got single life, term 10, $500,000. Paying monthly, age 34. The premium is $25.74 a month. That's a base premium of $22.14 plus a monthly policy fee of $3.60 a month. We've now installed the new software and the premium is showing as $25.74. When we did our comparison, we got a price of $22.14. This shows that prices do change. For our purposes, we'll continue using RBC. The goal here is to look at renewal premiums. Let's look at the output. This is term 10, $500,000 on a 34-year-old. For the first year, $286. At the renewal, it becomes $1,527, and then it jumps to $3,552. Let's figure out what the average cost is. Looking at $25.74 for 120 months, which is 10 years. Let's add that to memory. Then we have $137.39 for 120 months. Let's add that to memory. Then we have $319.68 for 120 months. Add that to memory, recall the memory. That's the total outlay. We're looking at coverage for 30 years, which is 360 months. So divide that by 360. We get a cost of about $161 a month. Let's now look at term 20. Here, look at the premiums. They're quite good in the first 20 years and then see how dramatically they increase after that. Let's figure out the average cost here. We're paying $39.06 for 20 years, which is 240 months. Then paying $534.47 for 120 months. Add that to memory, recall the memory. Let's divide this by 30 years, which is 360 months. You get a cost of $204 a month. This is more expensive than the term 10. For term 30, the cheapest choice from a major company was Sun Life, 34-year-old, term 30, $500,000, $64.35 a month. Over the 30 years, that is much cheaper than the term 10 or the term 20. Here's the client summary. If you want to keep the insurance beyond 30 years, look at what happens to the premium. It goes from $64 a month to $1,091 a month. Coverage ends at age 85. Overall, we can see how premiums do vary. If you focus on the going-in price and don't look at renewal rates, say for term 10 or term 20, you could end up paying a lot more for your insurance than you need to. If you know how long you need insurance, it's a really good idea to look at coverage which matches the duration of the need.